Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, New York coffee. The recent bump and run reversal rally here had been due to a mid-May to late June reverse head and shoulders bottom pattern, the market easily reaching both the primary and secondary topside targets for this pattern. There's a bright green neckline, this reverse head and shoulder pattern, currently at 293 3/4, which we may see visited by the market again, I suspect, in a not too distant future, much as we saw an approach towards it 2 weeks ago. You see, prices rising from that break higher in late June formed an early June horn top, and then started to form what looks like a mid-July to date bear channel, currently 274.35 to 313.10. The top side is capped by the slowly declining gold long moving average, currently 314 3/4, and prices have dipped once again below the strategically important 50% Fibonacci line of the May 24 to February 25 move at 310.80, as well as the nearby old May 2011 high at 309.90. There is something else I'd like to once again look at here. For this, I'm indebted to Ray Bradbury for asking me about New York coffee 69 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some very interesting insights. You see, on my monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It was a multi-year 2012 to 2024, very large reverse head and shoulders bottom, a bright red neckline on my monthly chart, currently 279.90. The break higher over this neckline reached its primary target on the upside and just about reached its harder to achieve secondary target. Then the market turned lower, and over the course of 2025 and now to 2026 has formed a very, very, very large double top pattern, an Adam and Adam double top, based on that bright red neckline. Now the market had breached and broken below the bright red neckline, and I felt obliged 8 weeks ago to lay out some targets below for this really long-term pattern. Thus, a primary target would be down in the 184.90 zone amongst the congestion of 2023 and early 2024, and the 2020 to date uptrend, which is currently 185.80. With a secondary harder to achieve, much harder to reach target X1 down in the 132 even zone, on top of the congestion from late last decade and the start of the 2020s, plus the shallower 2019 to date uptrend, currently 132.85. Now, I've always said, please bear in mind that these are long-term, possibly very long-term targets below for this double top pattern. And that would be fine normally, except we have last month moved up significantly, back up over the bright red long-term neckline, with something important that I have warned about, a monthly key reversal up. We have already carried on higher in July, and that now puts at threat both target X and target X1 below. I said I would wait until we closed July completely to fully comment, but it looked like the move lower below the bright red neckline might have been a false break, and considered as a consequence retiring targets X and X1. However, we have really exploited the reactionary move back up, so I will for now, we haven't really actually exploited that reactionary move back, so we'll for now still maintain those longer term targets on my daily chart below, but I am watching now for further markets response. London coffee. 58 weeks ago, so over a year ago, I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition was important, as it started back then to press down, magnifying the subsequent breaks lower. The moves lower had enough of an impact on me back then that I drew an important parallel bright red bear channel based around it. That's currently 27.04 to 36.57. Sorry, 36.37. 5 weeks ago, this bear channel was ruptured on the upside, but prices have not sufficiently lost contact with it to call the bright red upper bear channel line properly broken. Additionally, the market has also not let go of the companion to this downtrend, and that's the declining gold long moving average, currently 38.01. All in all, it should have been a seismic event, and it started that way, but prices ran out of steam soon enough and created instead a June to late July dark blue ascending expanding wedge pattern. This looked good for the upside targets of a primary target X up in the 45.29 area, a secondary harder to reach target X2 up in the 47.26 area, with a break above the bright red big bear channel. But in another twist in the market, prices have started to form a late June to date descending wedge pattern, currently 36.37 to 38.64, highlighted in bright red on my daily chart, as the broken upper bear channel line makes up the lower trend line of this new pattern. And I've drawn a simple early July to date downtrend in bright red on top to make the upper trend line a downtrend. In effect, the earlier ascending expanding wedge pattern has morphed into a descending wedge pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.